Munish, thanks very much for your time.
Thank you.
Good morning.
Good morning.
So what's philosophically, how do you look at this entire issue? All these 20, 25 PSU banks being consolidated into 5 or 7 large banks.
So, Prashant, like you rightly mentioned, it's more of the same. It's nothing new. I think this is being debated for over years. The Narasimhan committee, then the Chidambaram government, now Mr. Jaitley. So everyone's saying the same thing, but essentially nobody has kind of questioned critically where have we reached with the whole process of nationalization of the banking sector, which undertook about 50 years back. Has that delivered what it has to? Has it reached the maximum impact it could? Is it time now for the government and the country to look at this and move forward and say, you know what, we need to reduce our stake below majority, we need to hand this over to the private sector and let this develop the way it would in the normal course. It's not to say that nationalization did not serve an objective. I think it did over a period of time. But it's reached a stage where maybe the marginal returns of that are questionable. The country continues to be under-penetrated on the financial services side. More than half of the country doesn't have access to formal credit. And the India, banking system, the size of which and the size of the GDP is really low. And I think these are points of worry for the government, and they are taking action steps in all possible manners. But the public sector banks continue to worry. And, like you said in the Gyan Sangam, one of the takeaways, so call it, was consolidation. And, they need to understand or at least define the objective of consolidation. Is the purpose of the consolidation essentially to bail out the weak banks and merge them into the more profitable so-called banks? And then, if the public sector banks are 3/4 of Indian banking, so instead of having, 27 banks where SBI has 18% share, there are 11 banks who have market share of 1% or less, 11 public sector banks who have market share of 2% or less, and just 5 of them who have over 3%, with SBI at 18%, followed by Bank of Baroda at 6%. So you've got a lot of these small public sector banks. And I think that's really the moot point. Are you trying to salvage what you have created in this whole public sector domain with a lot of small banks, not profitable, huge NPA problems, governance deficit very large, and they're essentially being used for social initiatives, they're being used for political purposes, and a lot of directed lending happening through these PSU banks. Now, so you have governance issues to tackle, you have ownership issues to tackle, and I don't think consolidating the existing PSU banks are going to create large world-class banks. You don't consolidate 10 weak banks with almost no net worth and assume that they're going to be global banks. They don't become global banks. So on the consolidation, if you want to, so the government has tried earlier, the NBI was merged into PNB, and PNB had to suffer for quite a number of years to get over that. A Global Trust Bank was merged into Oriental Bank of Commerce, and OBC never got out of it. So, good so-called profitable banks on the public sector side, and if you're going to put the weak ones into them, I don't think it works. Combining the weak banks within themselves does not work. So what are you left with? You're either left to say, how do I really downsize what I have by, closing the tap of capital? Or you essentially say, can I clean them up and then privatize them and sell them off? And I think the first inkling of that has been, mentioned in the budget when they spoke about reducing the stake in IDBI Bank below 51%. And that would, to my mind, be an acid test as to how they would look at some of the banks, clean up the balance sheets, and then see if they're buyers. Of course, how do you value these banks? The amount of stress assets in these banks, and that's a big issue. But I think it's a complex it's a complex issue. It's political. It needs regulatory approvals to do from the parliament in case you're trying to denationalize these banks. So it looks like it's going to be more of the same, where there's more talk, but I hope this time there can be some action.
Okay, but you know, the reason why there is renewed chatter and talk is because of the situation we find ourselves in at this point, right? Weak asset quality, large capital needs, focus to improve quality of governance management. But as you said, it's unclear if consolidation will actually help on all these fronts, right? That's the point you're making.
Yeah, absolutely.
It might actually work the other way, as you said, with some of the weaker banks being merged into relatively stronger banks. Then the stronger banks are harmed rather than the combined entity becoming stronger than before.
Absolutely. And you know, Prashant, in a lot of these cases, it's very prudent to look at the root cause. What went wrong on these public sector banks for them to have reached the scenario in which they are? And you've got to look at the political interference, you've got to look at the social objectives, you've got to look at directed lendings. The deputy governor himself, in one of his speeches and presentations, very bravely has defined the entire governance deficit in these organizations. So when you're dealing with governance deficit, and they've defined how the banks have been using accounting to evergreen loans, etc., favor some of the larger corporate houses. So there is a fair bit of governance which needs to be tackled here. I think that's one of the first things they need to solve. So they need to reform before they consolidate. So they need to first say, can we clean up the system? Can these banks run on their own without interference? Right? And I think some statements were made during the Gyan Sangam very categorically that we will not interfere with the way these banks are working. But again, we have to see how that pans out. The next set of reforms would be, can they go to parliament and say, we want to reduce our holding in these banks? Can they give operating control of these banks to professionals? Right? You can be an owner of a bank, does not mean you need to run it. Right? It's just ownership and management can be divorced, and they can let these banks run independently. So I guess they have to tackle quite a few issues with no easy answers. But the fact that they've dealt with the NPA issues by catching it by its horns and trying to see how they're going to resolve the issue, it gives me some encouragement that the government could look at this PSU bank issue, not necessarily consolidation. I would suspect sale and deprivatization in some aspect would be more prudent thing to do.
Even if the government were to push forward, as you said, you believe it otherwise, you believe it's more talk rather than actual action. Even if this were to proceed, right, beyond whether it should be done or not, and the government pushes ahead with it, how hard or easy is it going to be? Because, I mean, there are unionized staff. We've seen pushback before. There is also the issue that some of the weaker banks are very large in size, right? So I think how will you deal with that? So is it going to be the integration itself, the process itself, once you've gotten past to whether one should do it or not, how difficult or easy is it going to be?
So it would be really tough, okay? Just the noise of consolidation, if you were anywhere close to Gurgaon, there were bank unions on strike outside the venue of the Gyan Sangam without any action having taken place. Remember, the public sector banks employ 8 lakh people. And you're dealing with a lot of employees, you're dealing with them being highly unionized, and you're dealing with a government entity which was formed through constitution. So it's not going to be so easy to unwind a lot of the things which are over there. Now, and like you rightly said, there are cultural issues, there are regional banks, there are banks which are SME banks, retail banks. So there are the host of issues around it. There are also multiple technology platforms on which they work. Somebody is on Infi, somebody is on TCS core banking, somebody is on something else. So they're integrating these banks and large banks is not easy. I think secondly and more importantly is the fact that these banks are today struggling with their NPA issues. So the management of these banks, rightly so, should be completely consumed by the fact that they need to, work on their existing assets. They need to recover what they're doing. They need to, get operating stuff done rather than get into a merger of any kind. Can I look at the next couple of quarters and say, this bank is not dealing with its NPA problems? I think the entire management team should be awake 24 hours trying to solve that.
Yeah, absolutely. This entire thing about SBI and 5 of its subsidiary banks, 3 of which are listed, being merged into the parent, does that make sense? I mean, this is also not a new story.
It's not. So, 2 have already got into SBI in earlier days. So, I think this would be the easiest and the lowest hanging fruit. If they did have to action consolidation, SBI, which already has 18% of market share in the country, and each of these subsidiaries, the 5 you mentioned, have 1% market share each. So, SBI would become bigger and would become 23-24% of the market, and I think would be reasonably capitalized because it does have the ability to raise more capital. But we are still, struggling with the balance 22 banks in the country, and say, what do we do with these banks? And that's what I mentioned initially, Prashant. The government needs to define properly. Are they trying to solve the problems which are inherent in the PSU banking sector, which to my mind are, governance deficit, NPA problem, and lack of capital, and subscale sizes? Or are they seriously looking at the fact that you need 5-6 very large banks in India to be globally competitive, to be able to have large balance sheets, to be able to raise funds in a competitive manner, to be able to be big enough to fund infrastructure in this country? Now, I don't think that these struggling PSU banks are going to serve the other purpose. I think they're 2 very different objectives. And when we say we want 5-6 large banks to be globally competitive and help the country grow, I don't think you're going to pick those out of the PSU lot.
Okay, fair enough. Just to go back, Munish, this entire process of divesting, giving up control, are you hopeful we'll see a lot more of it? You said IDBI would be an acid test, but are you hopeful that we'll see a lot of it?
I don't think so. It's the ability of the government to get regulations past the parliament. And this would, to the best of my knowledge, need to get policy reform. So, to get that policy reform through the government machinery, I think will be tough. I think they're struggling with quite a few other issues. But to the extent that, they can do what they can, I think they will. I think the other way, and I think there is tacit privatization happening, is the fact that in the marketplace itself, the private sector banks will continue to get disproportionate market share in the years to come because of their ability to raise more capital, and as the growth picks up, naturally they would get more market share, and the PSU banks, where it would be a scarce resource, would be unable to do so. So I think this whole 70-30 ratio between PSU and private sector banks over the next 5 to 10 years may shift itself. And with the new licenses given to payment banks and small regional banks for the last mile, I think there would be opportunities to see how they can grow that part of the business, and so the private sector pie would grow. I also think that rather than just reducing their shareholding, there are quite a few NBFCs which are very large, which have very decent distribution networks. They have excellent brand names. They are not struggling with either capital or NPAs. And those could be very useful candidates to look to see if there could be merger, consolidation, or sale on that part. Just for example, if you look at a Muthoot Finance or a Manappuram Finance, these companies, Muthoot has 4,300 branches, a bigger network than most of the PSU banks. Manappuram has 3,200 branches, extremely large, lakhs of clients, dealing with small ticket, doing the last mile, inclusive, capital adequacy both over 20-25%, and NPA levels around 1 to 1.5%. Very strong candidates. If you look at the financial services landscape, you find these entities which actually have capital, have ability to process small loans for the last mile, and I think the government should look at that very positively and look at that as an opportunity. So
imagine I'm very brave.
listen, if you're very brave, I think the positive side is, for the first time, the government, with the help of an exceptional functioning RBI, has defined the problem and said, we have an NPA problem and a balance sheet problem and a capital problem. They have defined themselves that they have a governance deficit. So, I think all the action steps they're taking are positive. I think it's going to make a difference. And it's a moot point whether the capital they've allocated is adequate, how fast they will do it. But I think this kind of action is happening for the first time, and I'm optimistic that it's going to solve the problem eventually. Whether it's bottomed out or it's going to take a couple of more quarters to bottom out, I have no idea.
With a 3-year perspective, are these public sector banks where they're trading good buys? I'm asking for your judgment.
I would wait for another couple of quarters.
Okay, fair enough. Better do the right thing, right? Absolutely. Rather than jumping on too early.
That's right.
Munish, thank you very, very much. Great speaking with you.